All right, we're going to do something a little different to close the session out or close the day out. We're going to have Keith Neumeyer present first about First Majestic, and then we're going to seamlessly transfer or move over into a silver market discussion. And Keith's prepared some slides for the silver market as well. So we're starting with a company presentation that is going to move into a silver keynote. So stick with us, and Keith, it's a great pleasure to have you back here, and thank you so much for joining us.
Okay.
Where did Rob take the clicker? There. I just park here.
Welcome, everyone. Nice seeing you all. It's great to be here in Frankfurt, and great to see some familiar faces and some new faces as well. So maybe the mining investor audience is actually increasing. Well, let's hope that's the case. So I'll get right into my presentation. Lawyers gone crazy. We're right in the middle of a transaction, so they increase the size of the forward-looking statements, so you could read it if you wish. So about First Majestic, many of you probably know the story, but we're generally speaking 50-50 gold silver. All our production is in the form of dory bars, which puts us in a pretty unique place, which I can discuss if there are questions about that. Mining companies produce either concentrates or dory. We currently are producing dory from 3 mines. Large land package, goal to be the largest silver producer, primary silver producer in the world. And we're the only mining company also in the world that has our own mint, which I'll talk about in a few minutes. Talking about mining, you can't not talk about ESG. You know, I've said many, many times that the mining sector created ESG. We didn't call it ESG, we called it CSR. And we've been doing, you know, even from my early days, you know, putting First Quantum together in the 90s, you know, we're funding schools and soccer teams and infrastructure, electrical, water infrastructure, and so on and so forth. And that's what the mining sector does. We're generally speaking the only employer in town. And without us, these towns and communities don't exist. So it's our responsibility as a mining company to make sure the towns that we're active in are sufficiently funded in their schools and infrastructure and so on and so forth. We take a lot of pride in doing that. Our score has improved dramatically. We added a couple of people in this department a couple of years ago, which has really benefited us in our scoring. We're now I think we're in the best bottom quartile of scoring in these 2 categories in the mining sector. The S&P's score of 37 just came out a couple of weeks ago. We're expecting this, the Sustainalytics score to be coming out in the next couple of months, and we're expecting that's going to also improve, likely below 30, which will put us in a pretty special place within the mining community. So as most of you probably know, we've announced a major transaction back in September. We're acquiring a company called Gatos. It's not a very well-known company. It's only been in production for 3 years, and it's very highly institutionally held. Didn't have a very broad retail shareholder base, so hasn't really been that well known. We've been following it for quite some time. We paid $970 million in the form of shares. First Majestic, the ratio is at 2.55 to 1. Interestingly enough, Electrum, a fellow named Tom Kaplan, who runs Electrum, currently owns 32% of Gatos. We're welcoming him on board as a major shareholder of First Majestic. He'll end up with about 12% of First Majestic, and he's bringing in a large group of investors or institutional investors. As I said, Gatos is very institutionally held, and it's going to be quite nice to merge our shareholder base of 85,000 shareholders worldwide, primary retail, with their institutional shareholder base. We are requiring regulatory approvals, which we're waiting for, and we will be going for shareholder vote. We'll be announcing the date of those 2 meetings in the next few weeks, we hope. So what does it do? It puts 3 very, very large world-class, large district-scale assets under one umbrella, and I'll get into a little bit more details as we get through this. We'll be moving from around 21 million ounces of silver equivalent production in 2024 to around 32 million ounces of silver equivalent production in 2025, and I'll break that down as we get into deeper into this presentation. It increases our cash flows quite nicely. It keeps our leading status in the silver sector. Large land package, we're adding 103,000 hectares of Los Gatos to our portfolio and improving our balance sheet. And there's many, many synergies which we are realizing even on a daily basis. We have a team currently on site. They've been there all week working on integration, and we're finding all kinds of ways to save money, from buying tires to buying cyanide, by buying, diesel, a variety of different things that we rely on as a mining company, that our purchasing power is much better than theirs as a single asset company. So we're going to be able to reduce exploration costs as another example. So you'll see the synergies occur throughout 2025 as we merge the two companies together. So this is the map of Mexico. You can see the closeness of these assets. Santa Elena, being in the state of Sonora, Los Gatos being in the state of Chihuahua, and of course San Dimas in Durango, and our head office in the state of Durango, in the city of Durango, and then Encantada as well there. So all these are very, very close together, and it's all in northern Mexico. Very friendly mining states. And we're happy to be in Chihuahua. We've looked at Chihuahua a number of times over the last 20 years. And well, on a side note, we just celebrated our 20th year anniversary last September. So it's nice to finally have an asset in the state of Chihuahua. So what does this look like? This mill has got to be the nicest looking mill we've ever seen in Mexico. It's quite amazing. And you can see that big round dome in the back of this photograph, and that's an ore storage dome. And I think every mining company would love to have one of those. And it's quite rare to see them. And it keeps your ore dry in the rainy seasons. And in Nevada, for example, it keeps your ore dry in the winter during the snowing seasons. So it's quite important to have a facility like that. They spent $330 million on this mill, very much overbuilt. But great for us, so it's nice to see. We're currently running at they are currently running at 3,200 tons per day. The plans are to take it up to 3,500 tons per day in 2025. It adds 103,000 hectares, as I already said. It says 7-year mine life here, but they just came out with a new resource just a few weeks ago, and they've extended their mine life now to 10 years, which is pretty nice to see. Low-cost producer as well, and a high cash flow producer. It does produce a concentrate. 70% of the revenues are in the form of silver, and 30% of the revenues are in the form of lead and zinc. The zinc goes to Dowa, which is a Japanese refinery, and the lead goes to Glencore, and it gets shipped, I gather, to Korea or China. I actually don't know, but I'll know shortly. Moving along, so you see the top silver mines in the world. These are publicly traded silver mines. You see the Los Gatos there, and the San Dimas there, and the Santa Elena. So this effectively puts 3 of the largest silver mines under our umbrella. So a pretty nice place to be. It will reduce our costs as well on a global scale, and it'll drag our costs down nicely. And our purity. So currently this year, 2024, we're 43% silver, and we're 57% gold. Next year, we'll be 51% silver, and we'll be 35% gold, and the balance will be in the form of lead and zinc. And you see our purity compared to our peers. Hecla at 41%, Coeur at 31%, and Pan American at 21%. So it keeps our leading position in the silver space, which is obviously something that's important to me. And it says again there, just repeating myself, going from 22 million ounces to 31 million ounces, increasing our cash flow and margins quite nicely as well. Oh, that, by the way, these numbers are based on $24 silver when we put this together. This is based on our acquisition date. So going to Santa Elena, this has been a pride and joy for us since we bought it. We bought it in 2015. It was producing 2.5 million ounces a year that year. This current year and last year, it's close to 10 million ounces. It's heavy on the gold side, which is not a bad thing, but it's a little bit more gold than silver. Very low cost producer, and just been a great asset for us. We converted it over to LNG. It used to be all diesel up until a couple of years ago. And this is one of the reasons why we have improved our ESG score so nicely, because we did convert this over. And we have our lab, our corporate lab that does all our lab work for the entire business is located at this operation. And this is, you see the Ermitaño splay there right in the middle of this slide, the pink area. This was the discovery that was made in 2016. We got it in production in 2021. And that was the reason why our production went from 2.5 million to just shy of 10 million ounces. And we've now just developing the Luna, which you can see it says Ermitaño Luna there on the other side of the slide where the arrow is pointing open. That area will be coming in. We're running a drift into that area right now. That area will be coming into production at the end of 2025, supplementing the current feed to the ore. And we had a major discovery announced in July of this year. As you can see, I'm not sure if you can see those grades because the print might be a little bit too small. But these grades, you got 54 grams gold, 400 grams silver, and that's a high one, obviously. But and 8 grams gold, 400 grams silver, 10 grams gold, 80 grams silver. So, and we've got now, because of this discovery, and this was news released in July, we have 7 rigs sitting on top of this ore body drilling right now. And we've drilled dozens of additional holes. We'll be putting out an update on this discovery in the next few weeks. And we hope to have a resource wrapped around it, a preliminary resource wrapped around it by March when we put out our annual information circular. So San Dimas is a very well-known mine. It's been in production for 250 years and or more. It has gone through a little bit of challenges over the last 12 months. We had some union activity whereby they decided they wanted to slow down a little bit, and you can see the production dropping here. We've just signed 2 new agreements with the union in the last 6 weeks. And we're now seeing production numbers improving in the last 2 weeks, which is really nice to see. So we're expecting to end 2024 off on a positive note. So we should see Q4 showing an improvement over Q3. And we're optimistic that 2025 will go back to its original or its more common annual production numbers, which are closer to 12 million ounces versus 10 million ounces. That's what we'll be expecting, we're hoping. And of course, that'll affect costs in a positive way. So Encantada, we've talked about this a lot within the market. It's a smaller mine. It doesn't produce a whole heck of a lot, but it is important to us. It's been in our portfolio since 2005, and it's 100% silver, which is our only 100% silver mine. It did have one of its water wells collapse in June of 2023. And as a result, we had to reduce production. We had to cancel all exploration and reduce development because obviously water is pretty important for mining. So the company went into the red for a few quarters, and we discovered a new water well in April of 2024. And it took us a few months to pipe it in. It was piped in June. We started filling up all the tanks July, August. And we just hit 3,500 tons a day just in the last 4 weeks. So we're back up to normal throughputs. So we should, again, another improvement in Q4 we're expecting. So this, generally speaking, the costs, all-in sustaining costs at Encantada has always been kind of in the $18 range. So we haven't put our guidance out yet for 2025, but look for some improvements coming in 2025. It should be a 3 million ounce producer. That's generally what it has produced for the last, basically 10 years. Jerritt Canyon, this is a mine, very strategic asset in our portfolio. We bought this back in 2021. We had it operating for a while, but we ran into some challenges. It does have 3.7 million ounces of gold, not small amount of gold, obviously, 5.2 grams, which is decent grade. But it was challenged by a few events that occurred that was outside of our control. And I made the difficult decision to shut it down in early 2023. In hindsight, we probably should have shut it down on day one and made the improvements first, rather than trying to operate it and improve it at the same time. But hindsight is 2020. But we had 3 rigs active this year. We're going to be drilling next year, and we'll be continually investing at Jerritt Canyon. It's a 2 to 3 year story. We won't see production here at least for the next 2 to 3 years after we rehabilitate some of the things that are required to restart this operation. I see I'm at the end of my time here, but our biggest catalyst coming up is really the closing of Gatos. This should take place in January, and look for additional exploration results from Santa Elena and San Dimas. And our balance sheet is quite strong. We got good financial liquidity, which is obviously important. And our shareholder base, as you can see the list of shareholders there, our market cap is about $2.5 billion, and the breakdown. And most of that institutional holding is basically ETFs. We do pay dividend as well. 1% of revenue goes out as a dividend, so it's designed to fluctuate with the silver price. Our revenues in 2024 will be approximately $600 million. So, obviously, that'd be $6 million in dividend. Revenues in 2025 are expected to be around $1 billion at current metal prices. And that's it.
Since we're doing the silver keynote right after, I think we do have time for 1 or 2 questions we have about First Majestic, the company, and then we'll talk silver afterwards.
Okay.
We have a couple questions from the audience for Keith. Raymond.
Don't you see it as a risk that you are mainly operating in Mexico?
We're all in. So it is what it is. If you don't like Mexico, don't buy the company. The governments have changed in a positive way. The last government was, quite anti-foreign investment and made it obvious, made it difficult for many foreign companies, not just the mining sector, but the oil and gas sector and other sectors as well. But the new government, which just was elected October 1st, appears to be much more business friendly. We're meeting directly with them currently, and there's a lot of activity, a lot of talk. Going back and forth, and the new president has come out and said that the mining sector is very important to the country and that she's supportive of the mining sector. She did, the condition is that as long as the mining sector follows the rules and regulations, she's fine.
Well, why I ask you about it, you have the chance to spread a little bit to, for instance, sprinkle, because you're a sprinkle holder as well with First Mining, so you can maybe jump into that whole with the company and go a little bit more to Canada.
Well, that's another topic altogether, which I'm not going to discuss. So.
Fantastic. We have time for one more question on First Majestic, I think. Okay. Do we have one more? Because I have one, because we talked about it in the interviews. Just exploration budget. I find that quite interesting. How much are you spending on exploration, and where are you focused?
It's $39 million in exploration in 2024, and you add Gatos on top of that, they're spending $19 million. So if we maintain the current budget, that'll be a $60 million exploration budget in 2025. Currently, we have about 26 rigs active in Mexico. Adding Gatos, I think they have 9 rigs. So that's a big exploration program to manage.
Absolutely. Do you have a certain ratio, like sort of with the dividend in mind, like 1% or 10% of revenue needs to be spent on exploration?
Not really, no. We don't really look at it like that. I think, the geologists come to me with a $100 million budget, and I'd say, are you crazy? and then we start from there.
Okay. So. Well, you got to always meet in the middle, It's a negotiation tactics. You start high and meet in the middle. No, fantastic. Keith, I think we can wrap it up on First Majestic. Although you haven't talked much about the mint.
Yeah, it's coming up.
Okay, perfect. Then we'll do that, and then we'll switch over to the silver discussion. We can have some more questions, of course, afterwards as well. Thanks so much, Keith.
Okay, great. Thanks.